Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, July 11th, 2019, and we are now again in the final hour of the trading day. I mention this every day, but it is important. I believe, in my opinion, that the most important prices of the day are the ones as close to the close as possible. That's when the hedge funds and the large money managers and the Wall Street types, that's when they do their buying and selling during the day. So I feel like those are the most valid prices, the most accurate prices to make my buying and selling decisions from. So, all right, let's see if everyone can hear me okay. If you can, let me know just to make sure we're good. Kind of an interesting day today. The Dow is up strongly, up 167 points, but it's one of those days where not all the indices are up together. The NASDAQ is currently down 15.52, and the S&P is up 1.2, so pretty flat line. So interesting day. When I saw how large the Dow was up, it was up over 200 points at one point, or more than that, sorry, and I thought, oh boy, having a good day. Then went ahead and looked at most of my positions, and I was like, this doesn't seem like a big day. But that's how it goes. So the Dow is much stronger today. The NASDAQ is getting sold into a little today. So Volo, hi Greg, everybody. Frederick, hi everybody. Oh, that's Frederick. Hey, how you doing, Frederick? Good to see you, my friend. Okay, so it looks like everyone can hear me. So. All right. Hey, there's Andy. Hey, Andy. Good to see you, my friend. Thanks for stopping by. I really do appreciate you guys spending your time with me. I mean, it's a lot to ask, right? An hour and a half a day, but I do appreciate you coming, and I do hope that you're getting something, and that you're learning something, and it's helping to improve your trading each day. So, all right. So the format for today, as usual. First of all, we're going to go ahead and run the legal disclaimer. Second, we're going to come back. We're going to take a look at all of my current positions one by one. We're going to go through them. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to do a few minutes on trader psychology. And then after that, we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at all the technicals. We're going to look at moving averages and RSI and MACD, ATR channels, support levels, resistance levels, risk to rewards, all the stuff that, in my opinion, you really have to calculate and analyze in order to be able to extract money out of this market. You know, when you're trading, you are dealing with some of the smartest people and most well-equipped people in the world. I mean, it attracts those type of people. So, trading is not an easy occupation. It's a very difficult way to make an easy living. Is that what it is? A difficult way to make an easy living. Yeah, something like that. But you get the point. Right. So, you really have to wait until you have a confluence of technical signals that offer you a good risk to reward ratio to have a chance in this game of trading. It's very, very difficult. Large majority of people lose money, and they lose money because they use improper position sizes. They're impulsive. They trade too often. If you read Market Wizards, and I really suggest that you do. I have a link in the description of this video. But when the interviewer asks each one of these market wizards, some of the best traders in the world, why do most people fail? It always comes down to too large a position size and over trading. So be patient. Let the trade come to you, and you might have a chance. So. All right, well, let's go ahead and run that legal disclaimer, and I will be right back. Give me about 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Chris F is here. How you doing, Chris? Thanks for coming by. It's good to see you again. All right. All right, everything's working well there. So, like I said, it's kind of one of those days, you know, you have mixed messages in the market, but we'll go through, take a look, and see if we can divine something at the end of the day. So, first of all, I did buy AGQ yesterday. Bought it yesterday on the 10th of June. I did buy it because based upon the 5 EMA crossing over the 20 EMA, this is a good, long-term, proven, profitable approach to trading the AGQ. So, you know, this is a mechanical system. As long as the 5-day EMA is above the 20-day EMA, I will go ahead and just hold this. If it starts moving my way, I will just phase out until I'm out of shares. That is my approach to trading these mechanical systems. You know, it's a good idea to have mechanical approaches, have discretionary approaches, so you have some diversity in your trading approaches. It's good to have diversity in the type of stocks that you have. You don't want to have too large of positions or have multiple positions in one particular area, like, you know, 4 positions of tech, right? Because then you're too correlated. But the same principle applies, in my opinion, to trading. You need different types of trading approaches. You need an approach that you know, something might trend for 2 or 3 months, and if you're in a discretionary trade, you're most likely not going to stay in that trade because there'll probably be some price action that will get you out. But you know, I've dealt with that a lot in my career, where I've had good trades and have gotten out and have seen them just move up and up and up, and I was like, dang, wish I would have stayed in that, but that wasn't my plan. So that's why I like to add mechanical systems. And AGQ, this is a mechanical system, but the key with these mechanical systems is, sorry, my puppy. The key with these mechanical systems is that they don't win all the time. As a matter of fact, they lose more often than they win, but eventually you are going to get a really nice long trend. And, you know, the key with trading is you have to have larger winners than your losses. And so with these crossover systems, you might, you know, they may only win 30% of the time, 40% of the time, but when you do catch a trend, you're going to catch a big one and pay for all those losses. So anyway, bought this one yesterday at $24.39. It reversed immediately today, but the plan for this trade is when the 5 closes below the 20, that will be my exit point, and that will most likely be a very small loss. So, you know, stick your toe in the water, see if it works. If it works, stay with it, let it grow. If it doesn't work, just get out and wait for the next crossover. So, but currently we're still in this. We did take a half position on this yesterday because this is a double leverage. So anyway, we'll see what happens. It's off its lows for today, which is good at least. And so we'll just see what this does in the future. All right, well, Etsy got us today. We did buy Etsy back on the 9th of July when we had this the 520 crossover. We triggered the fractal. Fractal is a high point with 2 lower highs to the left, 2 lower highs to the right. In addition to that was a big, strong bar on volume. So, you know, this is a good setup. Now, because it was a big bar, I'm waiting for I took a half position because I was waiting for a pullback to add my second half. But the plan for this trade was, if it tested the 100-day moving average and then closed back above, I would add my second position, my second half position, to make it a full position. But as you can see, it just went down. So looks like it's going to close under the 100-day moving average. I'm going to just go ahead and lock in this loss. Luckily, it was a half position because, like I said, when we had these big bars, I generally like to only try a half position, and obviously I'm glad I did. And yesterday we did hit a profit target right at the top. This is another reason I like to take profit targets, because even though this is a losing trade, I was able to take a portion of the trade off here at higher profitable levels, and so this move back down today mitigates the loss because we locked in some up there. And this is a good example of when you have a plan, sticking with it. My plan was a close below the 100. That little voice in your head that says, well, it's holding the 5, and it's holding the 10, and it's holding the 20, and it's holding the 50, and the RSI is still above 50. I could easily talk myself into holding this one more day because of what I just mentioned. These technicals are right here, but I'm not going to do it because I've really trained myself to, if I have a plan and it does not work, then don't look for another lower stop loss below you. Just get out of it. Yeah, it sucks for sure. Luckily it was a half position, but it still sucks. So, don't make this another bigger loss by waiting another day. I mean, this is not a bullish price action at all. We have a lower high. We've broke down below halfway of this moving average. None of this is positive, right? So, I say these things and I hope you listen and I hope you take it to heart, because, when I first started trading, I heard all these things, but for some reason I didn't think they applied to me. But they do. Learn from somebody else. Don't learn from the school of hard knocks. I mean, later in my trading career, when I had gone through all sorts of chaos and drama, when I didn't know what I was doing, that's when you finally take these things to heart and go, oh, why didn't I just listen to that? My gosh. So, do me a favor. You're going to learn one way or the other. You're going to learn by having big losses if you don't get out of your trade when you're supposed to, or you can just listen to me, who's had 24 years of experience, and you can just do it then and just listen to me now and not have to go through that. So it's your choice, but I hope you might listen to me and just take that to heart. So the plan was close under the 100. I'm out, and I will be exiting this at the end of the day. Hopefully we'll make a little bit of rally before the close and turn this 7-yard loss into maybe a 5-yard loss or a 6-yard loss, but we'll see. All right, IWM. IWM is another mechanical profitable back-tested system on the IWM, and the system calls for an entry when the 10-day moving average crosses over the 50-day moving average. So that did happen back here on June 28th, bought it at 155.88. Next day immediately gapped up. We were able to take about 24% of the position off up here at these higher levels. Then it went down, went back up, took another profit target, and then took another profit target yesterday. So technically I am still profitable on this trade right now, even though the price is under where we purchased it. So that's really why I like phasing out. If you'd like to see more information and more details about how I figure out how much I get out of and where I get out of, I have a video link in the description of this video that's called my phase out process. So it's just connected to my YouTube channel. So do yourself a favor, watch that video, and then there's 3 other ones there too about the indicators that I use, V1s, V1, V2 entries, and also my 7 different types of trading approaches. So they're all below in the description. If you watch those videos, if you're new to the channel, if you watch those videos, I think they'll help you because they talk about specifically exactly what we talk about every day here during the live stream. So that being said, is a down day today, but my stop on this trade is going to be when the 10 crosses below the 50, or alternatively, if it starts moving back up, I'll just continue to phase out until I'm out of shares. All right, where are we at? So yeah, Market's up 179 points, but does not feel like it. All right, so Philip Morris. Finally, we got a winner in this game today. I did take Philip Morris yesterday on the 10th of July, and the reason I took it is because of this V2 formation. Here is day 1, here is day 2, here is day 3. Day 2 washes out day 1 by at least a quarter ATR. Day 3 closes above day 1, confirming the entry. That's my trigger. When day 2 washes out day 1, day 3 closes above day 1, and in addition to that, we also close back above the 200-day moving average, which is always a good indication. But the reason if it would have just closed above the 200-day moving average by itself, I do not think I would have taken this trade. But I did take this trade because I had the combination of the V2 entry and also the close above the 200-day moving average. You can see it was a nice trade for us today. Hit one profit target here at 80.96, another profit target at 81.64, near the high of the day. Excuse me. So, this is good. This is strong. My initial profit target on this is going to be the 70 RSI. That's up here at 85.35. However, if we move up and we reject this 100-day moving average, or I get some other sort of red flag, like a lower high, or a rejection of the third ATR channel, because it's a discretionary trade, I may just go ahead and lock it in then. But as long as it's moving up, it's acting right, I'm just going to keep it. We have to let the profits grow on this if we have them. It might be tempting. Oh boy, that's a nice little gain overnight, I'll take it, but you can't really do it that way. So currently where it's at right now, if we close back below the 200-day moving average, I will exit my trade, or I will continue to phase out on the way up. Okay. All right, let's take a look at the SPY. All right, so in case we have some new viewers today, I do buy the SPY, the ETF SPY, SPY. I buy it each day at the close, and then I sell it again first thing the very next morning. And so why would I possibly do that? Let me show you. Geez, where'd my chart go? All right, here we go. So this is from Liz Ann Saunders at Bespoke Invest. It's a good channel in case you'd like to go and take a look at it on Twitter. But buying the SPY at the open, so buying it in the morning, selling it at the close each day, if you would have done that each day since 1993, you'd have actually returned a negative 13.9%. However, if you'd have done the opposite, you would have bought the SPY at the close like we do each day and sell it the next morning at the open, you would have returned 634.2%, meaning that more than all performance in the SPY since 1993 has come in the after hours and the pre-market. So this is really good information to know. This means that the prices were bid up in the aftermarket, bid up in the pre-market, sold into the close. I've been using this since December 26, and it's been really good, really positive. But I mean, look at the difference. The blue line since 1993 is buying it in the afternoon, selling it in the morning, 634.2% return. If you did the opposite, you bought in the morning, you sold it in the evening, negative 13.9. So, it's a powerful study that shows you that, most of the all of the increase in price in the SPY and the S&P 500 comes in after hours. So, if you're a day trader, what you're having to contend with, and look at these stats, it doesn't move during the day. It moves overnight. Just holding position overnight is actually an edge. And I know, a lot of day traders, I don't want to hold anything not overnight, it's risky. Yeah, I get it, but you have to look at the data. You know, the data shows you that that's where the increase in the prices come. But, you know, using this approach, I use a 10% position size of my account. So like, you know, let's say I had $10,000, I would buy 10% of that. That's $1,000. I buy $1,000 worth of this buy each night. Each day it's closed, sell it first thing in the morning. But there are drawdowns, so it's important that you use proper position size so you have the staying power to do this on a long-term basis and let the stats and the math work for you. Okay, so with that being said, I did buy the S&P 500 yesterday at 298.61. And I sold it at the open. It gapped up at 299.34. The day before I bought it here, sold it here. So I've had 2 nice days of profit. That was followed by 3 days of down, right? Does not win all the time. But in my experience, since I've been using it, it's been very, very profitable, and I really, really like the trade. So again, yeah, we bought it at 298.61 yesterday, sold it this morning, 299.34, and it is actually below that price, kind of confirming what I said. You know, it usually gets sold into in the morning, and then a lot of times it moves back down during the day. Sometimes it doesn't. Here it opened lower and then went up. But, you know, we have to look at the numbers. We have to look at the long-term results and data, and that's what it's showing us. So I will be buying the S&P 500 again today at the close of the market. All right, here's VIX. So I did buy VIX back here on July 8th. And why did I buy it? Well, the previous day, the price went under the 30 RSI, closed under the 30 RSI, and then it also closed under the third ATR channel. The next day, it closed above the 30 RSI and closed above the third ATR channel. That is my entry point. And when we go through the charts, I'm going to show you some other trades that I took based upon this. And, you know, the reason I like this trade is because 90% of price stays under the third ATR channel and above the negative third ATR channel. So, you know, when you start getting down to these areas, not all the time, right? Nothing's all the time. But when you start getting down into these areas, you know, the third ATR channel, the negative third ATR channel, often, not all the time, but often gives you some support. But in addition to going under 30 and back over 30 and going under the third ATR channel and back over the third ATR channel, that is why I bought it. Next day, immediately gapped up for us, took 2 profit targets on this gap up. Since then, it has gone down, but again, taking the profit target up here mitigates the loss if it goes against you. Currently, it's at a 32.25 RSI. My initial stop on this is going to be a close under the 30-day, because there are buyers that come in at the 30, just like there's buyers that come in at the 200-day. So if the buyers at the 30 cannot hold it, that's a bad sign, but currently it is holding above, and we're working on a V2. I'm sorry, we're working on a V1 here. So it was down much more earlier in the day. It has reversed, so we'll see we'll see. So anyway, slightly red day today. Oh, and I should say I only took a quarter position on the VIX. Normally I take a 10, sometimes I'll take a half, but on the VIX, because it's volatile, I only took a 2.5% position. All right, so let me take a look real quick. Hey, Chris F said, I took the PM as a discretionary trade, very small size, closed it this morning at 81.21. Where'd you buy it? I guess you bought it at the close. Hey, nice job. Good job. Dr. Jorgensen said, hey, how you doing? Pharmaceuticals got beat up today. What happened? Did Trumpy do or say something? Yeah, boy, wait till we take a look at Merck, Bruce. Whew. Hey, Mount Doji, how you doing, buddy? No clue, Dr. Jorgensen. Dr. J made a last-minute plan on CVS yesterday. Whoa, baby. I'm not sure I know what that means. Hey, Frank, how you doing? Frank says, would appreciate any thoughts on Ultra Salon. Okay, I'll take a look at that, Frank, as soon as the market closes, okay? So after the market closes, if anybody has any questions, please let me know. We've got a lot to get through here, so I'll spend as much time after the market closes, but I will definitely look at it. We may, Dr. Jorgensen says, thank you, Mrs. Spy. We beat the lady again. Oh, I forgot about the 3 days down. Yeah. At the close. Okay, good. Nice trade, Chris. Nice trade. All right, so listen, before we get on to going through the watch list, I do want to share this with you. I like to do a few minutes on trading psychology because it's so important. So this comes from Trading Composure at YVANBYEAJEE, or you could just type in Trading Composure. It's a really good site on Twitter. He shares really good information on trader psychology. So I would recommend going to that Twitter channel and subscribing to it, and because this is good information. But he writes, the brain is rather primitive in that it doesn't know the difference between a good habit and a bad habit. You, through conscious choice, have to show it. And it's so true, and it's so applicable to trading because we have good habits, we have bad habits, and we train ourselves into that, right? Like when I quit smoking, it's very difficult to stop smoking, but I had to just train the pathways in my brain to, okay, you are not a smoker. And it's applicable to trading in that, like with the stop loss that I was talking about on Etsy. If you repeat something over and over and over, you create that pathway in your brain. And in trading, you have to create these positive habits. You have to create this positive process in your brain. And it doesn't happen overnight, especially if if let's say you've been a golfer for a long time and you're kind of a hack golfer, right? And then you go to a golf pro and he wants to turn and change your whole swing around. Well, you're in the habit of that bad swing, so it's going to be harder for you to do it. But if you do what he tells you or she tells you, eventually your brain will get into that mode and do the correct thing. So with trading, if you're haphazard, sometimes you follow your rules, sometimes you don't, you're never going to create that positive habit, right? So, I say this every day, but create your plan, follow your plan, because the more you do it, for one, it's going to help your trading, and two, you're going to get in the habit of doing it. And it's hard to break habits. It's hard to break good habits, which is good, right? If you go to the gym every day, you're probably going to go to the gym every day because you're in the habit. So get in the habit of having having a good, positive approach to trading, so that positive approach becomes your habit, and get rid of those old habits, those holding on to losers, not taking your stops when you are supposed to, or position sizing too large because you have a feeling, right? I say that in air quotes. Get your process, do it every day, make it a habit. So again, this is from Trading Composure on Twitter. It's a great channel. The brain is rather primitive. It doesn't know the difference between a good habit and a bad one. You, through conscious choice, have to show it. So, I mention every day that after you learn the technicals, after you learn the setups, that's only about 10% of the trading. The other 90% is battling with your emotions, battling yourself, battling with fear and greed. That is where your real challenge in trading lies. So just make a commitment to yourself. I'm going to follow my rules. I'm going to, first of all, make good rules. Then I'm going to follow them so that I can create that pathway in my brain. So I'm just going to do it automatically. I mean, listen, if part of your process is like wearing a Bjorn Borg headband before you trade, then great. That's your process, right? Make that a habit. I don't care, but just put it together and then follow it. All right. So I hope that helps. All right, well, let's go through and take a look and see what is happening with today. All right, so Apple. Well, Apple is down today, interestingly enough, on a big up day like this. So nothing really interesting for me in Apple. Here we were able to close above the 30 ATR channel, came back in. Here we tested it again. And like so many stocks, and this happens very often, when you start getting up into this third ATR channel, that's generally the rubber band's pulled pretty tight. And the irony is, when it's up into this third ATR channel, that's when most people get excited about the stocks, right? They're like, oh, I don't want to miss out on that. But, if you go back in time and you look at the chart, like time after time after time, you start getting up into this third ATR channel. Third ATR means it's 3 standard deviations away from the center line or from the mean. That's generally when you start thinking about selling, not buying. So nothing on Apple today. AGQ, we talked about this. We did buy this yesterday with the 520 cross. So the 5, 24.11, the 20, 24.05, it is still above. So I'm going to continue to hold this trade until the 5 goes below the 20 on a closing basis. That will be my initial stop loss. Advanced Micro Devices has had a nice run, but again, it hit that third ATR channel, and that was about it. If you looked at it yesterday, it looked pretty exciting. If you looked at it the day before, it looked pretty exciting. But I would not have taken it here, just because where would my stop have been? Probably down here. And where's my potential, theoretical profit up to the third ATR channel there? So there was more risk than there was reward. Good thing we didn't take it. I mean, I wasn't even close to taking it, but again, just to point out, it hit that third ATR channel and came back down. Amazon was able to close above the third ATR channel, move up one more day, but today it has reversed. You can see it triggered a V1. Here's day 1, here's day 2, washed out the high of day 1, and looks like it's going to close below the close of day 1. Not going to short this. It's too strong. It's above the third ATR channel, but just a good example of a V1 to the downside. So nothing on Amazon today. Boeing has had a nice strong day today. Probably one of the reasons the market is up so strong, because Boeing's a component of the Dow. Nothing really here. I mean, it is good that intraday we were below the 1 ATR channel. We're closing back up in. We're at a 50.35 RSI. I would expect that is probably where it's going to find some resistance, and it's exactly where it stopped. Nothing on Boeing. In order for me to get interested in Boeing at this point, a close above the 200 maybe, or ideally a move up, a couple days down, a spike down that goes below the 1 ATR channel, and reverse back up with the V1, V2. Because the people that bought down in here are likely to be selling here. That will probably make the price go down a little bit. But then if it can rally back from there, then all the people that sold here, bought here, sold here, then that whole group of sellers would be out of the equation, making it easier to move up. So nothing on Boeing today. Alibaba. Well, boy, it had that gap and it's just continued down. I might be interested in Alibaba if we can test the 200. It'd be even better if we had a V1, V2 test of the 200 like we did on our entry on Philip Morris, but nothing there. But, this is a good example here of phasing out. I was going to buy here. I didn't. Because I was in something else and we had the Fed meeting. But if I had bought here with the close above the 200 day and my stop was just to close back below the 200, look at all this nice juicy profit that you would have missed out on if you hadn't have phased. And let's say it comes back tomorrow and closes below. That's why I have to phase. I have to take profit when it comes to me every day. Caterpillar, well, we had this nice move up. We have been slowly dripping back down. Nothing too serious. Yesterday's bar was a little serious, but now we are in the value zone. This is where, now it's in the zone that I'm interested in. It made a higher high. It's come back down into the value zone. Now my requirement for entry is I need this to move sideways a couple days. Well, tomorrow we'd have 2 days behind it that kind of stopped going down at this level. So if we have another day down, sideways, and then it spikes down and reverses and get a V1, V2, I would be very interested in buying Caterpillar. a lot of people send me emails about V1s, V2s, and say, hey, here's a V1, or it's in the value zone, so I'm going to buy it. But listen, the requirements are it has to have a higher high, it has to come into the value zone, has to move sideways. I get a lot of people that send me charts that do not move sideways. They just go down and then they go back up. The more it moves sideways, the better. I mean, minimum of 2 days, but literally the more days sidewards, the better. And then a spike down, and the spike down, the washout of the previous bar has to be at least a quarter ATR. From here to here is an ATR. From here to here is an ATR. It has to be at least a quarter of it, not just a little bit. So Caterpillar is starting to be interesting to me here, but I need a V1 or a V2 trigger to get me back in the trade. Woo! Canopy growth. Well. It's really gotten sold off. We're at a 33.23 RSI. What I'd like to do, what I'd like to see is I'd like to see it in the coming days go under 30, under the third ATR channel, then back over, similar with VIX. So that would be my entry on Canopy in the future if that happened. And because it's below the 200-day, I would only take a half position. But it's not there yet. Let's see if it will test the third ATR channel. Let's see if it will test the 30 RSI. Okay, Cisco. Well, nothing here on Cisco. There were no, we came back down in the value zone, but there were no entries here. So nothing on Cisco. The Dow moving up nicely, pretty close to that third ATR channel again. So I definitely would not be buying this. I would wait for a move back into the value zone or some other type of signal. Here's a good example of a previous trade we took back on June 6th when we had a close below the 200, then a close back above 200. See, this gives us a good risk to reward ratio. Keeping this as long as it's above the 200, getting out of it if it closes below the 200. So if I was wrong and it went down, I would have a small loss. But I kept it and phased out all the way to here, right? So look at this reward compared to the little risk that I would have had. I didn't know it was going to go up. You never know. You're always guessing. I hate to say it, but you are always guessing every trade that you take. But the important part is how you manage it, depending on what it does. But, this was a nice close back above the 200. We phased out here, here, and here. It moved sideways for a while and then phased out here, here, and here. It was a wonderful trade, but nothing on the Dow today. Walt Disney, much stronger earlier in the day. We're creating a bearish kangaroo tail here. So nothing on this. I'd like to see it come back into the value zone, go down, move sideways, wash out by at least a quarter ATR, go back, trigger a V1, V2, but nothing on Walt Disney. We did have a nice trade back here on June 3rd based upon what I just told you. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. Day 3 closes above day 1. It happens in the value zone. And we had a nice 4 or 5 day trade, just right up to here. And that's where we exited. So, I was waiting for another pullback and it came, but I did not get a trigger to get into the rest of this, unfortunately. But this was a really nice, easy trade based upon a V1 or a V2 within the value zone. And a cherry on top is it rejected that -1 ATR channel in the V2 formation. Etsy, this is one of our positions that we bought back on the 9th with that close back above. Luckily, it was a half position. Again, when I have these big, strong momentum bars, my tendency is to only buy a half position and to enter a full position if it backfills back about halfway. The stop is the 100-day moving average, close under the 100-day moving average, and it looks like it's going to do that. So I will sell this at the end of the day. Ford Motor Company, well, we made a higher high. We came back. We are now into the value zone. We are starting to move sideways. So all we're looking for here at this point, this all looks good. We're just looking for a stab down and reversal back up to trigger us back into the trade. Facebook. You know, if I was in a shorting kind of mood, this is probably where I would short. I'm not going to, but the reason why is we were above 70 RSI yesterday. We were above the third ATR channel yesterday. Today, now we're under the 70. Now we're back under the third ATR channel. If I were long Facebook, 100% I would get out here today based upon that. You know, this is even the type of pattern that sometimes I would think about shorting. I'm not going to short this, but you know, you really want to make sure you have a good setup before you short. But this would be one, but I'm not going to short this today. But again, just so you know, above 70 RSI the previous day, above the third ATR channel previous day. Now we're down below the 70. Now we're down below the third ATR channel. So that would be a legit short trade if you were so inclined. 5 below. Working on a V2 here. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. At least it is currently right now. It's not bad. I don't see a lot of volume here today. And it did reject the 1 ATR channel last time, so nothing on that. Gold. Well, nothing here today. We did come into the value zone. We rallied. We came back down. Mount Doji, this is what I was talking about with a lower high. We go up. We come back down. We do rally, but then we come back. See how this is now? This high is lower than this high. So based upon this, I would not take any V1s or V2s because I have a lower high here. I'd really need it to come out and wash out this previous low before getting back into this when you have a lower high above you, which we do. So if we could come out and wash out all of these lows back down here in the value zone would be even better. That's where I would get interested on gold. Google. So I did buy Google here based upon, I think it was a 5. I always forget that one. Oh, 1030. I bought the 1030 cross right here. It did go our way the very next day, so but I did sell it because it rejected this previous high and it also rejected the 200 day. So I did take a 1-day profit on that. The next day it went up, broke above the 200. I re-entered for a long, and next day immediately went against us, which happens, right? You just never know. But the point was, it was a losing trade, but I followed my plan and got out. Then it went back up. Yesterday closed back above. I did not buy it because it was too close to the third ATR channel, so my stop would have been a close below the 200. This distance, my theoretical profit target would be to the third ATR channel, only this much, so the risk to reward did not make sense. You can see today it literally tagged the third ATR channel and reversed back off of it. It's still up today, but you know, that third ATR channel holds some weight, everybody. So always look at that third ATR channel and, you know, overlay it on your decisions and kind of calibrate your trades with that in mind. So nothing on Google. Goldman Sachs, big strong day today. It's a 69.99, so it's right there at that 70. I'm certainly not going to buy this here. It's just too high. Again, I like to buy things closer down into the value zone. Here's an example of a previous trade. We bought Goldman Sachs here on the 27th. When it closed back above the 200, also triggered this fractal. Fractal's a high with 2 lower highs to the left, 2 lower highs to the right. And so I had a double confirmation of the trade right here with the close back above the 200 and triggering the fractal. And you can see, boom, boom, went our way nicely. The next 2 days phased out. And then I sold it here when it rejected the 70 RSI and closed back down. So it was a really nice trade. I think it was 3% or something just in a couple days. And since then, it's just moved sideways. But today we've had this big move up, but you know, it's just too high for me. The risk to reward does not make sense up here. IBB, down day today. Here's an example. Mount Doji asked me about this. We had these two bars down on really high volume. The next day, we did have a close back above the 200, but I did not take this because the volume was lower. So we had higher volume on the way down, lower volume on the way up, and it's fortunate we did not take this trade. Intel. Well, it's right there at the 200-day moving average. I'm not going to buy this. If it had closed above the 200 and also triggered a fractal, I would consider it, but there is no fractal. Here's a high, but it only has one low below it, not two. So nothing on Intel today. I'm just going to have to wait for a better setup. The Russell, we talked about that. We bought this here based upon the 1050 cross. We did phase out some here. We did phase out some here and here, but right now it is below our entry, but still a profitable trade because of the phase out. So nothing on this. I'm waiting for the 10 to cross back below the 50 as my exit on this. This is a mechanical trend trade. Coca-Cola. Oh boy, I'm running out of time. Dang it. Nothing on Coke. Lockheed Martin, too high. Nothing on Lockheed Martin. We did have it's just up here. I like to buy in the value zone. We had a nice V1 here, back in the value zone. That's where I like to buy, and this is where we bought. And this was a beautiful trade for us. We phased out all the way up to there. MasterCard, up today, up above the third ATR channel, but nothing there. We took a short here. Above the 30, above the 70, below the 70, above the third ATR channel below, went down. Then we went long here when we had this nice V2, and it gapped nicely our way. We got out of about 50%. Got out of the rest here, but it was a profitable trade, but nothing there. 3M, nothing there. Merck, look at Merck, everybody. Just remember, this can happen to any stock on any day. You never know. Don't get lulled that you think the market always goes up. So this can happen any day. So keep that in mind when you're doing your positions, when you're doing your position size, because position size is the only thing that you have control over. I'm not going to buy it here. I'm not going to get involved in this big bar. If we can mellow out, go under the 30 back over, possibly. Microsoft, nothing there. Netflix, it's kind of running some resistance up at that third ATR channel. Nike, nothing on Nike. Philip Morris we have, so that's been nice. Hit 2 profit targets. PayPal, I did get into PayPal here. Again, we had a nice up move. We moved back down into the value zone. We have day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1, happens in the value zone. And we had this beautiful trade all the way up to there. I did get out of it yesterday when it tested the previous high and rejected it. So I did lock in profits here. Is up a little bit more today, but that's fine. It was my plan, right? I saw a red flag, and so I got out. Qs, nothing on Qs today. It's dealing with the third ATR channel. An example of a mechanical trade was it closed below the 200, back over the 200. Keep it as long as it's over the 200. Get out quickly if it closes below the 200. We phased out, went sideways. We phased out, went sideways, and we got out right here. That was a huge trade. S&P, we're going to be buying the S&P at the end of the day, as you know. Square. I can't remember if Mount Doji still has Square. I hope so, because it went up above 70. I don't think it ever closed below 70, but let me know, Mount Doji, if you have that. Wonderful trade. Certainly not going to buy it up here, but this is a good example of a double bottom with a bullish divergence. I was taught this by Dr. Alexander Elder, but essentially you have a low with deep bars. You have a rally. You make a lower low on shallow bars. We had a V2 here. We closed back above the previous range. We closed back up into the channel. So we did enter the long position here, and you can see it was a beautiful trade from entry to the very, very top there, almost or a little over 14%. SSO, nothing there. AT&T, big reversal bar today. Bonds way down. That hurts because I was short that and I didn't get that move. But oh well. Tesla, nothing there. Natural gas, big reversal day. Oil. This was a tough one. I was considering buying this yesterday with the close above the 200 and trigger that fractal, but I just, again, it's just my process. It's just my rules. If I break my rules once, it's easier to break them the next time. But I generally, well, not generally, I just never buy at the third ATR channel because, that's where the rubber band gets pulled and stretched. Dollar down, Visa up, but too high. VIX down 31.28. Stop is at the 30. Verizon did take a half position here, phased out a little bit, and then it went down again. These big bars, I don't want to let them get. I don't want to not take them because of the big bars, but again, that's why I took half, and it was a good idea that I took half. Energy Select, no. Financial, nope. Real estate, big sell-off today. Utilities, nope. And healthcare, big down day today. So with that being said, everybody, I do not see anything to buy today whatsoever. The only thing I would consider is this short on Facebook because it closed above, it was above the 70 RSI, it was above the third ATR channel, and now it's below the third ATR channel, below the the 70 RSI. So I'm not going to short this, although I do feel like it's totally legitimate to short, but I'm not going to short it. Let's see where we're at here. And listen, after the market closes, if anyone has any questions at all about, what we talked about today, I know I had a lot to say here when we were running through this, but after the market closes and things settle down, I'm very happy to answer any questions that you have, okay? All right. So Etsy, glad it's come off its low. We were going to get rid of this today, but I'm glad it came off of its low. And again, we did take a profit target up here, which helps. So we'll be getting rid of this at the end of the day. IWM, we're keeping that. Philip Morris has done nicely for us today. We'll keep that. Going to re-enter the SPY and the VIX. When I look at my positions, everyone, I look at them as my flower bed. And, with the flower bed, you want to keep the weeds out of the flower bed, right? Well, I consider weeds losing positions. So keep your flower bed free of weeds. Keep your portfolios and your stock positions free of weeds. Let the ones that are green, let those babies grow, right? But the ones that are red, that are losers, that have gone down below your stop, just consider those weeds and just weed those suckers out. I know it's kind of a goofy little analogy, but it is true. Just think of your stock positions as your garden, right? Let your vegetables and your flowers, or whatever you want to call them, let those babies grow. But when you have losers, just consider them weeds and get out of there, right? Just get them out of there. So we're back up over 200 again on the Dow. Interesting. Apple's still down. Google's up. It's good. Going to be interesting to see what happens with Facebook, isn't it? Like I said, I'm not going to short this. Let's do a hypothetical short right here at the market, and we can talk about that tomorrow. But this is not a real trade. This is not a real trade. All right.
Order partially filled.
Okay.
Order filled.
So it's very close to break even today in the account, which is fine. You know, it's important that you have big days up, small days up, break even days are fine, small loss days are fine, but you have to do everything in your power, everybody, to keep those losses small, because obviously losses are losses, right? They take money away from your account. But in addition to that, they also work on you psychologically to destabilize you. And I'm sure people out there have been trading for a while. They know that horrible, sick feeling when losses just mount and get worse every day, worse every day. Just please don't do that to yourself. You know, if you just hurry and get those weeds out of there as quickly as you can, not only are you going to save money, but you're going to save your mental capacity and your mental capital. And I can't stress to you enough how important, everybody, that is. It's so important. And if you guys are new traders and you've never been through that, I know it's probably kind of hard to understand, but yeah, just make sure you're always mentally together and stable and not destabilized from losses. And losses, you know, it's like getting punched in the face. You get punched in the face, you know, you can go from being very calm to just completely reactive, and that's what's going to happen if you have a big bad day in the market. So all right, so one more check. Boy, Etsy's really come back for us. That's nice. That's nice. But we will be getting out under the 100. PM's having is back up over $1, so that's good. That's positive. Dr. Jordan says, flower bed. How about the weed bed? Get rid of the flowers, keep the weed. Well, that's what I was saying. You could call it vegetables, or you can call them flowers. You can call them weeds. Whatever you like, let those babies grow, right? But the weeds, you know what I mean by weeds, right? The bad ones, you can call it anything you want, but keep your garden free of the bad ones. Mount Doji says, Twitter is down today. Yeah, not too bad. Not too bad. Oh, I got that confused. No, wait. Mount Doji have Twitter? Or did you have Square? I can't remember now, Mount Doji. Let me know. I can't remember. All right, so I've got all my orders put in. AGQ, we're keeping. Etsy, we'll be getting rid of that at the end of the day. IWM is that mechanical trade, so keeping that. Philip Morris moving up nicely. SPY, we're buying at the end of the day. And VIX still holding above 30 RSI, so I will be keeping. But you can see, you know, the last few days, everybody, I've not bought much at all. And, you know, that's a good thing. You know, it's important not to buy anything unless you really see something and feel good about it. Don't just buy because you're in the habit of buying, right? And you don't have to buy something every day. I mean, the last few days, I think I bought like maybe one position yesterday, and I'm not even sure if I bought one the day before. All right, I will get to those questions, Mount Doji or Frederick, just as soon as the market closes, just to make sure we're in good shape here before it closes. All right, so Etsy's going, SPY is going to be bought, and that's it. So we don't have a lot of positions, and we didn't add any positions. Interested to see what Merck's going to do here at the end. Oh boy. All right, 3, 2, and 1.
Order cancelled.
All right, there we go.
Order filled. Order cancelled.
All right, so those are all my automatic orders right there at the end of the day. All right. All right, so listen, before we get to questions and answers, just wanted to put in a quick plug. I do offer private one-on-one coaching and mentoring lessons in the evening time via Skype. So, if that's of interest to you, you feel like, using some one-on-one time with me, if you feel like it would improve your trading, which I think it will. If you're interested, my hourly rates are in the description of this video, and then my email is also in the description of this video, or you can reach out to me on Twitter. So, I love to teach. I've had really good results with my clients. I've turned losing traders into winning traders, and they can hardly believe it, but it is true. I have been able to do that with my students. So, I'm on here talking every day about this stuff, right? And you guys are just listening. But if you do a private lesson with me, I'm going to be the one asking a lot of questions. I mean, I'm going to teach you everything, but I'm the one then asking you questions, and I really require that you teach it back to me. You might think you know that you know something, but when you actually have to teach it back to somebody, you're really going to find out whether or not you understand it or not. So, that's one of the real advantages of having the one-on-one lessons. And it usually just starts with a free phone call, get to know each other a little bit better. I just like to know a little bit about you, how you got into trading, what your trading approach is, what challenges you're having, and mainly what are your goals. And then I'll put together a lesson plan to help you achieve your goals. So anyway, if that's of interest, please let me know. And then also, if you're learning something from these live streams and from my YouTube channel, please do me a favor and hit the thumbs up button on this video. It really helps with Google. It helps get the word of the channel out there on Google. They promote it more, and it helps build the channel, because there are a lot of people in this world that really struggle with trading. It makes them depressed. It negatively affects their lives, and if they watch this channel every day, I know it's going to help them. So help me help them, help me grow the channel, by sharing it on social media or by hitting the thumbs up button on this video. I would appreciate it. So all right, well, let's take a look and see. Frederick says, thanks for all your advice on the stock I bought. Hey, you're welcome, Frederick. Mount Doji, that lower high makes sense. Good. Yeah, always look for that lower high. Lately, we haven't had a lot of lower highs, Mount Doji. We've had higher highs, but now that we're starting to become range bound, we're going to have more of that. Steve Burns, Twitter as a website just came back up. Hey, Steve, was Twitter down? I didn't know Twitter was down. Hey everybody, it's Steve Burns. If you don't know who Steve Burns is, he's a famous author, trader, mentor, friend of mine, just one of the best people in the world in trading education. If you haven't gone to his Twitter site, it's at @SJosephBurns on Twitter. He puts out great information. So do yourself a favor, go to his site, read everything. You're going to become a better trader. I didn't know Twitter was down. Mount Doji says, I was already out of Twitter. I was just saying that the services was out. Oh, wow. Didn't know that. Frederick says, hi, Greg. Do you do a diary on Excel? I think what you mean by that are my results. Do I enter all of my trades in Excel? I don't do it on Excel, but I do it here on Trade Navigator. Trade Navigator has a section where I enter in my trades and commissions and stuff every day, which is nice because, then you can really see what your results are for the years, the result for, this year or any years are. And it's really important to know that information, because you might think you're trading well, but it's important to go back and look at your stats and see if you are trading well. Like, what's your winning percentage? What's your win to loss ratio? Those kind of things, your average trade. But, you can certainly do it in Excel, but because I have Trade Navigator, it has a little module that I do. And it's tedious, I have to enter it in every day. It gets tedious. That's the tedious part of trading, but you have to do it. You have to know what your win loss is, what your your wins, the amount you win compared to the amount you lose, what those factors are. So it is important. We don't talk about that much. Thanks for bringing it up. We should probably talk about this more, but you should really get some real statistics on what's going on with your trading. Mount Doji says, would love to hear your thoughts on ATVI. Okay, so, you know, obviously we're making a nice higher high here. We come into the value zone, which is good. Um, I don't see any sidewards movement though. It's just up and down. This here, here's day one, day two. Day two did not, it did wash out day one, but it didn't close above day one. So that's no good. Day two, this technically becomes a V2 because here's day one, day two, day three, day two washes out day one, and day three closes above day one's close. But this is not good either because of the gap. We went from here, we opened here, we did backfill a little bit, but we didn't test the close of that day two. So this is a gap situation, which is a red flag. And another red flag is your day one is larger than 1 ATR, showing that there's a lot of selling pressure and a lot of supply coming into the market. So, I mean, obviously it's turned out fine, but this is certainly not an ideal V2 because it needs to come up, go back down, small bars, sideways, 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 and then have a V1 or V2 that doesn't gap. So the only good thing about this is it did wash out day one nicely, but the day one bar is just too large, and the day three bar, there's a gap. So it's a subpar V1 or a V2 all the way around. Let me see back up here. I can't remember. Frank was asking about Ultra Salon. Anybody know the symbol of Ultra Salon? Let's see. Now let me go over here. ULTA. Let's take a look. All right, Frank. So it's moving sideways here. We did have a V1 here, but this V1 doesn't count because this bar is way larger than 1 ATR. It did wash it out, but I'm just not going to get in front of that. I mean, actually turned out to be just fine. But right here, it's pretty range bound. Let me look at this at the larger. If it were me, the last, you want to look back at the moving average, the last moving average that it really respected, and it really did respect the 100-day moving average. So, if I were to get interested in this, honestly, for me, if I were to get interested, I would have to wash out this prior low, and ideally at this prior low here and the -1 ATR channel, and wash out this 100-day again. So if the price moved back down here, went below, triggered a V1, V2, and then closed back above the 100-day, that is really what I would like. But this is really moving sideways here. It's kind of in a big range. So I assume that this will eventually start breaking out strongly one way or the other. I just don't know in what direction, and I don't know when. That's the problem. But when you look at something that's moving sideways, it's a pretty safe bet that that's going to move strongly one way or another eventually, but we just don't know the direction, and we don't know when it will happen. So if it were me, I would wait for a pullback to the 100, a rejection of the 100, and the rejection of the 1 ATR channel, and close back above. So I hope that helps, Frank. Just let me know if you have any other questions about that. Mount Doji says, got to get going, but I'll see your response on ATV later. Okay, buddy, sounds good. Thanks for coming, Mount Doji. Murat T, how you doing? 17 watching and 7 thumbs up. Weird. Is that bad? Is that good? I'm not sure. But I appreciate you coming today, Murat. Okay, do the diary help you to be a better trader? Yes, I think so. I think so. I mean, I always look at my statistics and go, okay, my winning percentage is pretty high, but maybe my risk to or my win-loss ratio isn't high enough. How much I win compared to how much I lose. But I don't think you're going to find a successful trader out there, Frederick, that doesn't keep his statistics so he can really look and see what's happening. Oh, JT, hey buddy, what's going on? Good to see you. Yep, ULTA, so I did get that. Johnny, I sold my Microsoft today almost at the 52-week high, but was too fast on the trigger. I blindly bought after the dip on 625. When would have been a better entry? Well, let's take a look. So you bought on 625. Well, that was the time to buy it. That was the time to buy it. This is one of those, I mean, it worked out. I'm glad it worked out for you. Let me make sure I read that. I sold my Microsoft today. Okay. But I was too fast on the trigger. Oh, I mean, if I would have bought it here and it was here, I think I would have still kept it. Didn't make a lower high today. Didn't lose the 70 RSI. Yeah, if I was in this trade, I probably would have kept it. It didn't fail to the previous range back here. Yeah, I would have kept it. But earnings are coming up, and this is a good time to mention, everyone, that we are starting to come into earnings season. So Philip Morris, I believe, has earnings coming up in a week or so. So no matter how high that thing goes, I will be getting out before earnings. It's never a good idea to hold through earnings. It's really a gamble. You just don't know what the earnings could be great, and it could still go down, right? Because it might already be priced into the price running up into earnings. It's fine to keep it running up into earnings, but after the day before, I would always get rid of it. But yeah, I mean, if I was in Microsoft, I would have still kept this. If I was in here right now today, I would have still kept it. I mean, it was a good buy down here. I don't think I would have bought there. I haven't traded Microsoft much because there really was no entry for me. Possibly you close back above the 50. Maybe, but I haven't traded Microsoft because I just haven't had a signal. Yeah, be patient, Frank. Johnny says, I reviewed the history of Microsoft before buying, and those drops have been routinely followed by an uptrend. Yep, they have, but one day they won't. Keep that in mind. So if when you bought here, I hope that you had some kind of stop, in mind in case it didn't go your way. Steve says, a trading diary journal is a trading book you write about your own psychology, risk management, and system. Yeah, that's true. I mean, not just the numbers, right? It's just not, I mean, you want to have your numbers, but like Steve just said, I mean, your psychology, what you were thinking, like a diary. So it's really good. I mean, having this podcast on YouTube, I really like. Sometimes I go back and I listen, to myself on these podcasts so I can get an idea of what state of mind I was in. And so it's really nice having this podcast like that. I don't write it down, but I have it recorded. But yes, I mean, everybody out there, keep track of your stats so you know how you're doing. And keep track of your mental state, how you're feeling, write things down. A diary is always good. A diary is good whether it's trading or anything else. Thanks, Steve. Appreciate that feedback, bud. Frederick, how do you manage when you are off your desk for a few days? You cut off all your positions? Well, I am never away from my desk. So I haven't had to deal with that. But if I did have to be away, what would I do? Yeah, I mean, if I had no internet access, yeah, I would just go flat. I would just go flat. I would probably, if I did have internet access, I would probably keep my mechanical trades because it would be easy to manage. But if I really was going to be away, wasn't around a computer, didn't have access, yes, I think it's a really good approach to just go flat and enjoy, because you're going to be thinking about it anyway, right? So, if you're going to have to take a break, just take a break and go flat. Being flat is a position, being long is a position, being flat is a position, being short is a position. So you don't always have to be in the market, especially when you're not there to manage it, to manage your garden. Thanks, Steve. I need to find examples of them to inspire me. Well, Frederick, I would just start doing it, Look for examples, but just start doing it. Just start writing down what happened. How did I feel? What did I do wrong? What did I do right? Frederick says, because I need to go away tomorrow. All right. All right. So, slightly down today. Slightly down today. So the last few days have been just kind of, sidewards motion, not too big, not too small on the upside or the downside. But again, that's fine, right? That's allowable in our system. Small losses, small gains, that's fine. Eventually we'll catch a trend here, something will trend, but as long as we keep those weeds out of our garden, keep those losers out and let those flowers bloom. All right, last call for questions, everybody. Then I'm going to put on my hiking boots and I'm going to head up into the mountains. It's a beautiful day here in Utah. Pretty warm today, I'll tell you that. So it's going to be a hot hike. All right. Well, thanks to Frederick. Appreciate you coming by. Thank you, Steve Burns. Really appreciate it. It's always an honor to have you here. I'm always excited when you're here. I know everyone else is too. It's like having a living legend in our chat. Johnny, good seeing you today. Thanks for coming. Frank, it's nice seeing you again. Appreciate you coming by. JT, good seeing you. Marat, thanks for coming by. It's the first time I've seen you here, I believe. I think so. Oh, why is sideways too important? What is the mechanics behind it? Yeah, so when a stock is consolidating and moving sideways, it's in a process of price discovery. People are not convinced one way or another whether it's going higher or lower. There's just as many buyers and sellers at those same prices, keeping it moving sideways. So, what's important though is that sideways bars eventually move to large bars, and large bars eventually move back to sidewards movement. And let me see if I can find an example here. Well, okay. Here we're going sideways. See the small bars moving sideways? Small bars, this little range, boom, moves to big. Big moves. And you can also say small bars lead to big bars, and then big bars lead to small bars. Or no movement, just moving sideways leads to upwards or downwards movement and back to sideways. But you can see here we move sideways, here we move up. Now we move sideways again, then we make a move. Here we sideways, 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 up, sideways, 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 down, right? So that's why it's a really good question, Marat, because on the V1s, V2s, I'm always talking about having something move down in a sidewards motion and then having the V1 or V2, because I know sideways motion is going to lead to big motion eventually. Let's see. trying to think. I can't think of one right now. Boy, JT, I don't know if JT's still there. JT, yesterday you had me look at a stock that was really great that was moving sideways. I don't know if you're still there, but if you are, could you tell me what that was again? Because that was a really great example of a sideways movement. So, but you know, when you when you have a V1 or V2, I like to see it move down, move sideways as much as possible, because I know that sideways movement is eventually going to move to a stronger move up or down. All right, maybe JT's gone. But anyway, Murat, I hope that helps. It's just sideways movement is just where there's price discovery. People don't really know if it's worth more or less, but that's the mechanics. They just don't know. It's indecisive. That's why the bars are moving sideways. But eventually, it's going to move one way or the other. So I hope that helps. All right, Mount Doji and Dr. Jorgensen, thanks for coming by. And Steve and Frederick and Chris F., good seeing you. Nice trade on Philip Morris. And Frank and Chris F. And I think I got everybody. If I didn't, I apologize, but I think I got everybody there. So, oh, that's right. I think it was XOP. Thank you, JT. Yeah, there we go. It was XOP. We had this move upwards. We came back down into the value zone. See the sidewards movement? Indecisive. But on the positive side, we know it's not going down anymore. That's one of the reasons we want to see the sidewards movement. But this other reason we want to see the sidewards movement is because we know sideways movement leads to strong moves. So we move down. We had this big move up. We came back down. We moved sidewards. And here was this V1. I would have taken that all day long. Next day, it did move up nicely. Down today, but I would still stayed in the trade. I would definitely still trade. But this is a perfect example of a move up, move down, sideways, 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 spike down, reverse. Thanks, JT. Murat says, thanks, great. I saw you live by chance. Oh, good. Watching from Norway. Oh, that's awesome. That's awesome. I don't think I've had anybody from Norway stop by. So thank you. I hope you keep coming back. I hope things are going well in Norway. Listen, if you have any questions that you weren't able to answer today, please feel free. You can send me an email. You can send me a message on Twitter. I'm happy to answer any questions that you have. And so JT says, always glad to help. Good. I like to have JT here because he's like right on it when I ask for something. So thanks for coming, JT. I hope this channel is helping. I hope it's helping everybody. And so tomorrow will be Friday, will be our last day, and we'll see what tomorrow brings. So thanks for coming, everybody. I do appreciate it. And I hope to see you tomorrow during the last hour of the market. Take care. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.